Hi, and welcome to the Friday Mortgage Minute. Looking forward to spending a few moments with you, and it's my job here to help you avoid the landmines for a flawless home purchase. Today we're going to talk about a really cool exercise I've been doing lately with clients who are really on the fence, and they're trying to determine what's the right approach for them. Should they rent? Should they buy? And we have this neat tool that I'd like to show to you today. It's called the Rent versus Buy Case Study. And what we do is we basically chart a family's trajectory 5-10 years down the road if they were going to rent as compared if they're going to buy, and we help them think through as many of the important factors as humanly possible. One of those factors would be tax deductibility, the amount of principal reduction, possible appreciation, and what that cumulative effect over a 5 or 10 year period will do to your net wealth or your net worth and your overall financial picture. On this slide, I want to show you just a brief insight into how we do this. You'll notice that there's 4 vertical columns in this section. And what we do is we've lined up a rent analysis or a rent proposal next to 3 potential loan options. And this was a real case study we did for a client in California. So the price points are high and the rent payments are high, but the case applies, or the theory applies to any price range. And what we said was, okay, here's a scenario where you rent. Here's what it would look like if you did an FHA loan with 3.5% down. Here's if we did a 30-year fixed with mortgage insurance. And here's if we did a 30-year fixed without mortgage insurance. This particular client had about 5% to put down. And so we were looking at options for him, rent versus buy, and what that might look like in those different loan scenarios. One of the key factors here you'll notice is we not only calculate the cash to close for the client, but also the net monthly payment. And this is something that people miss very often. When you pay rent, there's no tax deduction associated with that. When you own, at least currently, you're able to write off your mortgage interest. You're also able to write off your property taxes, and a portion of your payment each month goes towards reducing your principal balance. So we calculate a net payment or cost of owning as compared to renting. Now, in the next section here, in addition to giving you the snapshot of the different loan options, we try to look 5 to 10 years down the road and look at what the potential long-term effects of one decision over another would be. You can see here in the bottom section in green, we analyze a potential equity position in this home based on a 4% real estate appreciation rate minus the mortgage balance, and 5 years down the road, you've got a net worth or equity between somewhere at $270,000, $277,000. This next section, we take a little bit of a longer analysis. And this particular client said, I think I'm going to be in this home somewhere between 5 and 10 years. So that's where we set those parameters. And for each of the different loan programs, we calculated your potential net worth, assuming the same 4% appreciation, minusing off your mortgage balance. And that's the potential tax-free equity that one would move at the end of that period. We also, again, as I mentioned, calculate the net payments. And this is a really cool exercise. A lot of folks don't realize when you rent, you're still paying a mortgage payment. You're just not paying your mortgage payment. You're paying somebody else's mortgage payment. So when we run the numbers as an owner and we minus off the tax deductions, the principal reductions, and we compare what you're really paying for rent as compared to what you're really paying for ownership, it's really an eye-opening experience for a lot of our clients. This last slide was a comment that came from a family we recently helped. And we're hearing from clients that they're intimidated about the buying process, that it's confusing, that they're getting information all over the place, and it becomes kind of a whirlwind of information, hard to disseminate what's accurate. And what I would tell you is if you surround yourself with a right team, that's the right real estate team, the right mortgage team, the right advisors, and you have the right tools to find a home, it should be an enjoyable process, not something that's intimidating or overwhelming for you. Hey, we appreciate the opportunity to spend a few minutes with you today. I hope you have a great weekend ahead. And if this was valuable information, please like it. If you would like to share it, we'd love you to do so. And if there's anything you'd like to hear us talk about in the future, let me know. Be happy to do that. Leave us a comment down below. Thanks so much. Have a great weekend ahead.